Welcome to the TrustedBridge Capital monthly video series entitled Know What You Own. I'm your host, Eric Jefferson. I want to start by wishing everybody a happy new year. As well, for this first session, we're going to talk through a current portfolio, arguably one of the oldest investments around, going back several centuries. Of course, we are talking about the precious metal gold. Now, before we get started, we have a few quick words from our legal team. With that, we can now begin. So I want to start by addressing why would somebody want to invest in gold, particularly in today's environment? And to answer that, I want to go through and focus on two of the key attributes of the precious metal. First is its ability to hedge against inflation. Like all commodities, generally speaking, during inflationary periods, economies are expanding. That is putting increased demand for physical goods, obviously then putting a upward pressure on prices. Now we think about long term, why would that be valuable? Well, currently today, inflation is trending lower, granted, may still stay elevated for some period of time. As well, when we think long term, we have the returns over the last decade for stocks, bonds, and cash. Obviously, stocks, by far and away, the best performing asset class. Obviously, though, come with the highest degree of volatility. If you're a more conservative investor, simply looking to maintain the purchasing power of your wealth, generally speaking, conservative investors target bonds represented there by the Bloomberg US Aggregate. As you can see, not only has gold outperformed bonds over that 10-year period, but bonds have actually underperformed the inflation targets of 2%. That, in essence, means if you went back in time 10 years prior, invested in bonds as a safe way to grow your wealth, each year, every year, you incrementally lost purchasing power of that. Again, function of not being able to keep up with those long-term inflation rates. The second reason you consider investing in gold, particularly in the current environment, is its diversification abilities. Gold has a very low correlation to both stocks and bonds, meaning if there's an event that dramatically impacts either of them, gold may or may not be affected. 2022 is the perfect example. Rates skyrocketed, both stocks and bonds plummeted, gold virtually flat on the year. So if you had incorporated even just a small position in your overall portfolio, that would have helped mitigate some of those more extreme levels of drawdown. Additionally, gold tends to be at its best when volatility is elevated. Arguably, that is when you would want the increased diversification benefits of gold. 2008, another example, the biggest bear market decline in the last 2 decades. 2008, gold, best performing asset class, well ahead of both bonds and stocks. So lastly, I just want to spend a minute talking through some of the most efficient ways to get exposure to the asset class. First and foremost, the tried and true, owning the physical commodity. You can certainly go out, you can buy gold. Unfortunately, though, if you are owning large quantities, the transportation and storage costs can at some point become fairly prohibitive. Number two, as our capital market system has evolved, there are a handful of derivative type instruments you could own that would give you synthetic exposure to the price of gold. The issue, though, there are some counterparty risks there. That was one of the challenges that we saw in the 2008 global financial crisis. Option three, in my opinion, really the best of both worlds. There are exchange traded funds that will go out and buy physical bullion. They will store it, and for a very, very nominal fee, you can get exposure to the price of gold, but in a financial instrument that can very easily be held in a portfolio, can be traded, can be rebalanced. Much, much easier than going to a physical marketplace trying to sell bars of gold as you adjust your overall risk tolerance. That's all for this month. Again, I want to thank you for taking the time to tune in. As well, if you ever have any questions or ideas, topics you'd want to see discussed in future calls, please don't hesitate to reach out. You see my contact information provided at the bottom of your screen. Thanks again.